Good morning, market makers. Andrew here, and I'm just here to go through this whale pump and what to expect, what's probably going to happen going forward, where are we going to go, what's going to happen, those kind of things. So, I took a futures entry here last night, and I just want to explain why. So, we had a swing failure pattern here where price spiked up past a previous wick, but then fell back into the range, right? And so I took a position along here, hoping for future fall down. It happened again right here, swung up, swing failure pattern down back into the range. Now I moved down a little bit, but not the amount that you want where you're trying to make a decent profit. So I was waiting for a drop. And you'd be like, oh, well, what are the chances that it goes up? But if we look back here, we had the same thing. Swing up, drop back into the range, swing up, drop back into the range, and then drop. So I had a stop loss around the 150 area in case there was another swing up and then a drop back into the range before a fall. And I'm still pretty happy I took the trade. I mean, it could have been very profitable. It was a low risk trade, and I slept well last night. So I didn't really have any issues with getting stopped out. Now I am back in, shorting at this area here. We may rise to maybe around here, depending on the amount of pump they want to do. But the overall sentiment is still very bearish. You can see here the open interest is high, but the move is relatively low. If we even come back here, we had some open interest right up here where price is higher. And so the indicator is rising, price is falling, and that is hidden bearish divergence. We also have it on the money flow index, so we have it here, and we have it here. So, yeah, we are entering that as well up here as well. So, multiple hidden bearish divergences going on right now, where the indicator is rising and price is falling. I'm not sure if it's on the open book value or not. We can have a look. No, it's curling. Yeah, it's been like that for an hour or two. So we're starting to curl here on the on-balance volume. So we may be on the way back down as I'm recording this. I just want to run through. So this was a move here, right? I wish my mouse wouldn't do this. It does this stuttery thing. It's very irritating. Alright. We're moving up here. So that was a 5.7% pump from peak to, or from trough to peak. And if we come back further back, you can see we had a little sideways consolidation and a pump, like just back there. And we have a move of 5% here, right? And then it rolled and sideways, and then it rolled again. So this is a pattern that's played out in the past, and the results are fairly similar. So we should just shorten this up a bit, condense it, and we'll do another one here. And that's about 8%. So 5 to 8% is the range I would be expecting for a pump here, and so 8% might get you like around here maybe. So we'll just do a little pull here just to show. Yeah, so maybe we get to the daily range high or the point of control, 7-day point of control, maybe. Anything's possible. And if it does, I'm going to be shorting here as well. So I've taken a short here in case we just roll over. And if it pumps higher, I'll just buy more and then wait for the rollover, whichever happens first. Because we are obviously in overbought territory already, and we haven't reached the peak levels of price here. So for me, it's quite bearish. I'm still going to be shorting this. I'm not worried about some crazy reversal. You can see even here on the volume area, this move down was a lot stronger than this move up. Even the second candle afterward or before, you know. So there's a lot of things that point to continuation of the downward trend, which is also in those hidden bearish divergences that I showed you already. I'm just going to load up XO charts here just to show you some more divergences and the volume aspect. So we've got a lot of open interest, right? So there's been a big move in open interest and the price is still kind of rangy. It's not like, it's not exploding outwards, it's still stuck. And we've got all this massive open interest going on. So the price should be moving more with this open interest, but it's not. We are just below the previous week value area low, so we should find resistance around here. And then again, if not, we've got previous week point of control, and obviously the daily range bottom on the trading view. This line here is CVD, which is cumulative volume delta, and you can see here that we have a price spike here on our way down of CVD, and we've had this rise in price, and the CVD hasn't matched this previous high. So price is going up while the indicator is going down, and that's strong bearish divergence. So that's showing you more divergences stacking up against this move. And you can see here, hold on, just if we go here, you can see 116 million volume, 25 million positive, right? So in favor of the bulls. But if we go back to these moves further back, 114 million, 47 million in favor of the bears, 80 million, 56 million in favor of the bears, right? And then all this sort of, look at this, 86 million, only 7.3 million in favor of bulls. So it's not in favor of the bears or the bulls right now. It's just not. They're hoping, but there's no hopium in my estimations based on a lot of this chart. So that is basically my roundup for Bitcoin and my expectations. My expectations are obviously to rise up here, roll and go further, or rise up to the 7-day point of control and fall again. So those are the two options. You can play it whatever way you want. I'm letting you know that I've shorted here, and I'm going to short up here again. I have no stop loss. I expect it either to roll over and fall, or roll up and then fall down. So I'll be shorting throughout this move here. If anything changes, I'll let you know. But for the moment, still fairly bearish. Still expect further lows. And thank you for watching. I appreciate it. And I'll see you again on the next one.